Excited to be joined here by Congressman Warren Davidson. Congressman Warren serves as a representative for Ohio's 8th Congressional District in the House and is a ranking member of the Task Force on Financial Technology on the House Financial Services Committee. Welcome. Thanks for being here.
It's an honor to join you all. Thanks for hosting this, and thanks for people that took time to come in today and stick around for our panel discussion. So appreciate it.
Absolutely. Let's dive in. Give us your perspective on what we can expect, especially around Fintech, from the committee in the next Congress.
Is there anything going on in this space?
A little bit here and there.
Yeah. So I think, look, we just had ranking member, soon to be Chairman McHenry, with Chairwoman, maybe ranking member. I don't know what Maxine Waters is going to do. Announced that there will be an oversight hearing of the full committee on FTX in December. So that won't even wait till the gavels change hands. And that's certainly going to be characteristic of the next Congress. There'll be a lot more emphasis on oversight. And in general, that tends to be the case. When you have the party controlling the House opposite of the party that's in the executive branch in the White House, it tends to be maximum oversight. And in a way, you kind of have back-channel dialogues that, for the most part, are closed off, or certainly very different when it's cross-party, and when it's intra-party, a lot of times there is dialogue going on. So I won't say there's no oversight, but there's certainly not much public accountability, and so I think there will be a lot of scrutiny. There will clearly be a lot of scrutiny on the Securities and Exchange Commission. And that's whether that's things that Gary Gensler's led the most aggressive rulemaking at the SEC since Dodd-Frank. Other than Dodd-Frank, there's never been rulemaking like this. And when Dodd-Frank passed, well, you can understand why is there going to be a lot of rulemaking. We just passed a very major overhaul to the financial services space. But when Gary Gensler was confirmed, there was no major law that passed. It just Gary Gensler came in. So I think we'll provide a lot of scrutiny for that.
Definitely. And you mentioned FTX before I did, so I'm going to ask you one follow-up question on that one. How do you see those events surrounding FTX? One, impacting the market, the broader market, and two, how have they affected your legislative mindset moving forward?
Well, Darren Soto, Democrat from Orlando area in Florida, and I have had a bill since 2018 that could have made a difference in this whole situation. So, why is FTX corporate, why is FTX International based in the Bahamas? Well, to find legal certainty that we don't have in the United States. In theory, FTX US is firewalled from FTX International. If you follow the SBF feed, he allegedly thought that FTX US was going to be safe. That collapsed pretty fast as well. So these Jenga blocks fell pretty fast. Look, we've tried to provide legal clarity for this space for a long time. We haven't even been able to get our bill noticed for a hearing, let alone through markup. And it's 100% bipartisan. Most people in the space, when we talk to them, say that the most important thing is legal clarity for what is and what is not a security. And if you can't agree on what is and what is not a security, then how do you regulate the exchange? What can and can't be on the exchange? How do you move it? And I think the one takeaway from this is it would be incredibly foolish to limit self-custody. If you look at both Secretary Mnuchin and Secretary Yellen, Treasury under both of them started processes to look at limiting self-custody, or as they refer to it, self-hosted wallets. But the reality is just your ability to own your own assets. And fundamentally, people are telling you if they don't like self-custody, they don't like freedom, they don't trust you, and they want you to depend on someone they can control to control your assets. And when you look at a space right now that has the legal and regulatory chaos going on that we're seeing, not just at FTX, why would you want to limit self-custody? And I think we have to, this is our Keep Your Coins Act that I hope we can get across the finish line in short order. And I think the present situation makes that immediacy maybe more accelerated.
Yeah, absolutely. Picking up on something you mentioned there, tell us more about what you think the role of regulators should be when it comes to fintech, and how can government fintech partnerships or collaboration, be amplified going forward?
Yeah, so fundamentally, my view of regulation is, I'm not an anarchist, I'm a Republican, right? So if you look at the bill that I just referred to with Darren Soto, the Token Taxonomy Act, I've told my Democratic colleagues, hey, you finally found a Republican that wants to regulate something, you should take us up on it. All right, my general thing is more freedom and less government and sound money. But when do you need more role from the regulator? It's when the markets aren't functioning. So if you look at the sport of boxing or MMA or something like that, it's not a fight when they're hugging each other in the corner, right? What's the role of the referee? You break them up and make them fight, and that's what we should be doing with our markets. Free markets function when there's freedom, whether that's through antitrust or other types of regulatory capture. You see markets not functioning. So the proper role of the regulator is to create certainty. These are the rules. Can't punch below the belt, whatever. And you enforce the rules, but you don't shape the fight. You don't change the outcome of the fight. And whatever sport that you're a fan of, it's very frustrating when you're watching the sport and it looks like the refs are working against your team. And it's even a little bit disappointing when working for your team. You just want people to compete and win, right? And I think that's the right focus. And we just sent a letter from Republicans on Fintech and with Ranking Member McHenry to OCC, and basically saying, hey, look, some of the things you're talking about look like you're kind of limiting the role of fintech, and you're going to decide what fintech's okay and what isn't. How about the banks decide what fintech's okay and isn't, since they're the ones entering the partnerships? And I think that's the trouble with whether it's banking regulators or kind of the mindset shift at CFPB once Kraninger's gone, is you've got government's role seems to be we're going to be the deciders and shapers of the market. And I don't know whether we'll be 100% successful in changing that mindset. I don't know that mindset's going to go away, but we'll work very hard to extract it.
Definitely. No, I think you made a great point about that regulating towards free markets, I think is really interesting, and just picking up on that. Thinking about innovation in the industry, it's an industry that has evolved and transformed really quickly. In general, do you think that the U.S. regulatory framework has fostered a environment of innovation, and how do you think we can get there?
I still think like fintech in general is living on the legacy of success we had with the internet era. So if you look at the Telecommunications Act in 1996, we basically provided legal clarity and said, well, the government's going to stay out of your business and let this industry flourish. We haven't done that in this space for fintech. And part of it is the biggest players in the industry realized that everybody got disrupted when they allowed innovation in the past. And so they've worked very hard to disrupt the industry by heavy-handed regulation, by stifling legal clarity. We've had people working against the bills that we've tried to push for legal clarity. It's like, dude, just compete and win. You have all kinds of competitive advantages. Why wouldn't you just compete and win? And at the end of the day, learn from Apple and Microsoft and Google. They just buy they buy the good ideas and make them part of Alphabet or something. But at the end of the day, we still get the benefit of the innovation, right? You look at like YouTube and Waze were pretty good acquisitions for Alphabet at the end of the day, and that provides different concerns, but at least you get the benefit of the innovation. In fintech, we haven't done what was done for the internet area, which is provide the legal clarity. This, hey, you're free to innovate, and unfortunately, what's that resulting in? It's resulting in a lot of our capital, even though the talent is heavily here. A lot of the projects are launching offshore, just like FTX did, because they need to find a place that has legal clarity.
Definitely. And you mentioned legal clarity. You've spoken about the need to address these gray areas, right, in the regulation. That you need to provide more clarity to those innovative businesses like fintechs. Curious, just to follow up on that though, how are you thinking about using your position on the Financial Services Committee to help push for that legal clarity in the coming months and year?
Well, so for example, we've gotten close on stable coins to getting a federal framework. U.S. dollar token Tether, U.S. dollar Tether is offshore, but the next three largest are regulated as New York trust companies. So surely a company in Ohio or Virginia or Texas could say, well, we trust the New York trust company. We could provide some legal clarity to say, yes, if the treasurer in your state wants to hold these tokens, they should be able to do that and know that there's legal clarity for those. And I don't think that's necessarily the biggest issue to solve, but if you look at part of the unraveling for FTX, it really involved Binance's attack on FTT, which was allegedly a stable coin, but it clearly wasn't. And so provide accountability for what is and is not. And if you're not going to comply with that framework, then the regulators would be clear, hey, you should focus on this and maybe less on Kim Kardashian or something.
There you go. I like it. I did not have her on my bingo card for this interview, so I appreciate that. As we think about legal clarity, one area of importance that we're hearing about from a lot of fintechs, especially folks in the payment space, is access to the Fed's payment rails. How are you thinking about this issue? And is this something you think we can achieve in the next Congress, either through oversight or through legislative changes? Yeah,
so a couple things there. One is, like I said, in token taxonomy, one of the gray areas is the Howey test, right? And so, we have to provide bright line standard. Our bill provides a 4-part test that provides a bright line test. So whether you're the innovator, whether you're the investor, or you're a regulator, then hey, if you're on this side of the line, it's a security. If you're on the other side, it's not. Howey's kind of become, not clear enough for this space. And, the Federal Reserve has had a pretty clear standard on who gets a master account. It said, you have an action within a year, and after that, shall issue. Well, after 2 years, Custodia had no action. And so they sued, and the Fed tried to block discovery in that lawsuit, and they lost. So Senator Lummis and I led a letter, an amicus brief, which generally in the initial hearing, is rare that you'll see amicus brief filed. And why was it important? Because if the Fed could prevent discovery, then there is no real case. This potentially could be the most we ever learn about the Fed in public. If there really is discovery, and so we'll see. It may be like the fastest settlement in history, or we may actually learn a lot about the inner workings of the Fed here, which would also be good. But I think that's an example of where we use the position that we're in, even from the minority, both in the Senate and the House, to try to weigh in on an issue and try to shape the outcome. And certainly you'll see that enhanced with the majority.
Definitely. Well, and following up on that, I got a couple questions for you about the committee and the task force. Can you share anything at this juncture about the future of the task force on financial technology? Do you think we'll see that in the next Congress, perhaps as a subcommittee?
Well, I think everyone's pretty clear. Patrick McHenry will likely be the chairman. I mean, we're within moments of hearing officially the Republicans have 218 votes. And so we'll have a majority. McHenry will be the chairman. And so I've talked with him a lot. He really wants to change the jurisdiction of the subcommittees somewhat. He's kept his cards close to the vest in terms of how he plans to change that. We do know Fintech will feature prominently, as will the role of AI. I don't think you'll see Fintech and AI split. And I don't think that, beyond that, I could answer other than McHenry will certainly continue to prioritize that. And I think a lot of us on the committee see this area as one of the most important areas to address because there is a lack of legal clarity.
Got it, definitely. And in that clarity area, another thing we've heard a lot about is around privacy. And more generally on privacy, what do you think are the chances we'll see a national privacy standard pass in Congress in the next couple of years? I know you've been involved in drafting of the financial services bill, obviously some implications there. So curious of your thoughts on the privacy piece, and then also how you think fintech companies like some of the folks we have in the audience today should be working with you and Congressman McHenry and others to get these initiatives over the finish line.
Yeah, so broadly, I think one of the most important things for the country is privacy. So if you look, the Fourth Amendment does not say if you have nothing to fear, or if you have nothing to hide, you have nothing to fear. That's not, it says you have an expectation of privacy, reasonable expectation of privacy, and otherwise you need a warrant. We've seen kind of the role of surveillance capitalism. A lot of the billionaires in the past generation have been made by essentially monetizing data. And if you look at the promise of AI, a lot of that depends on having good pools of data. But if you look at the consumer, consumer financial data is pretty trampled. I mean, we really have very little privacy left. And I always say I wish people would be as vigorous in defending privacy as the NRA is in defending the Second Amendment. I haven't found that group yet. There are some groups out there that are aggressive in the space. Zoe Lofgren and I, who's active in the Progressive Caucus, and I'm on the more conservative end, we're still big on pushing privacy. I'd love to see I've asked Kathy McMorris Rogers, who will be chairman of Energy and Commerce and the Maine Committee of Jurisdiction. I've talked with, who will likely be chairman of Judiciary, Jordan, about Judiciary pushing it. I've talked with McHenry about financial services supporting it, and having H.R. 4 be a Fourth Amendment bill. The bill that we've got in that space is called It's Your Data, and it would recognize a property right in your individual data. And so you would confer that property. It would essentially create a national standard, whereas the default for a lot of companies has become the EU standard, which isn't great. And then in the U.S., it's kind of become California's standard, which is also not ideal. So I think we have a lot of opportunity to improve nationally, and I think it would be one of the most important bills we could pass. I'd say the odds of its passage are low. For the most part, everyone lobbies to prevent changes to the status quo. So I don't want to say there's no chance, but I wouldn't put big wagers on it.
Yeah. Is there anything that the industry can do to help improve those odds?
Tell Kathy, HR 4, and everyone else. I mean, I think we need it, and we need it also so that there's not asymmetric advantages. So if you look in financial services, we've clung for a long time to Graham Leach Bliley, and that's great if you're in a financial services space. You do have more legal clarity than some people in other spaces, but the reality is, with the rise of other actors across other spaces, you're seeing people monetize data in all kinds of fields. If you're an OE manufacturer for cars, I mean, a lot of Tesla's value is not just in the battery technology, energy play, not just in the transportation space, if they make pretty cool cars. It's in the data that they're collecting off of their vehicles and off the road networks, and they're collecting an awful lot of that data. So if you look, how do you access that? The easiest thing is if the consumer owns their data, and then the consumer can opt in, and then you can do all kinds of things for them. If you look at the promise of AI in financial services, customizing that customer experience, the rapid underwriting that's taking place with good access to data, and when the customer says, hey, I want to be part of that, they opt in, now you can get their data. But if you got to go collect that data from 400 pools because, well, I got to talk to Apple about their phone, I got to talk to General Motors about their car, I got to talk to 10 people about their house, I got to talk to their insurance company about this and their bank about that, and it's just hard. So if the individual really has the property right in their data, then you can make the fintech potential flourish much more readily. Having said that, I can't do a whole lot about that. That's outside of my committee of jurisdiction. I'm very optimistic that consumer privacy has been very bipartisan. Steve Lynch and I have worked really well together on the task force. And of the things that CFPB is doing, we're really excited about the rulemaking they're doing on 1033. It's been pretty collaborative, and I'm optimistic that they're going to do a pretty good job. We'll see when it finally comes out. They've worked on it for a while, so hopefully it's a masterpiece. And if it isn't, we'll be happy to give them some rapid feedback.
There you go. Absolutely. Absolutely. Speaking of individuals, I wanted to hear a little bit about your experience talking to Ohioans about this space. As you've talked to your constituents, do you believe that fintech's creating a more innovative financial services landscape for them and increasing opportunity? Like, what are you hearing from your constituents?
Yeah, so I mean, to be clear, this election overwhelmingly, people were talking about, yes, the economy, but inflation. Yeah. That was crushing folks. They were talking a lot about freedom, and some of that's left over from COVID and kind of in our neck of the woods in Southwest Ohio. Generally, the perception was a massive overreaction, by everyone, including our governor. So more freedom, and then safety, whether that's national security, border security, crime, and kind of the approaches. So those were the three things I heard the most about. But when you really look down and say, what's going on in our underlying economy? Ohio got some great wins over the past year or two. We got the Intel announcement to put a big chips plant there. We've got electric vehicle battery joint venture with LG and Honda going into Ohio, and then behind that, part of the talent pool is fintech. So we're getting, financial services is a big deal in Ohio, and banking for sure, but insurance is also big. River Financial, big player. They're there in Columbus now, and whether you're talking, any part of our state, but certainly the big three in Ohio, Cleveland, Cincinnati, and Columbus, we're seeing investments in fintech, and consumers are seeing this show up, whether it's with that or young folks. When I talk to, over half of them have used Robinhood. And we had some noteworthy hearings on that. So I think people are seeing that you're creating a lot of accessibility to financial services. The percentage of people that have owned any kind of digital asset is huge in the people under 30 and growing among people my age. I think it really does have a chance to change the consumer environment. And that's why I think sort of like, in the 90s, not everybody realized how much the internet era would change their lives. I mean, we had New York Times Nobel Prize winning economists think that it was going to be like the fax machine. It was off by a little bit. I talked with a person in manufacturing when I was getting out of the Army in 2000 who thought that the computers were going to be a fad. And I thought, you mean like the dot-com bubble last year? And he goes, no, all them computers. I'm like desktop computers? He's like, yeah. Like, this was not 1981, folks. This was 2000. So people sometimes are slow to get how things are going to change. Well, you guys are in the room because you know that fintech is going to fundamentally change our economy, and the average person doesn't yet realize how transformative it can be. And all that potential doesn't happen, and it certainly doesn't happen the right way if we don't get the regulatory framework right. And I think foundational for this is privacy at the end of the day. And if you get the consumer to have the property right, then you can flow it across all kinds of platforms and make the data, more functional for what's capable with the AI. We've got the chips investments. I mean, there are a lot of things that we can do with the space. I think the biggest threat, actually, to disrupt this is a failure to act by Congress on the one hand, and then on the other hand, poison pills like central bank digital currencies, which you look at, it's like the creepiest surveillance tool known to man, and it's sort of like the Faster Payments Initiative. When Janet Yellen was chair of the Fed, she said that was going to be a private sector thing. And then, when Powell was there somewhere during that time, the Fed took over the Faster Payments Initiative. So all this private sector capital that was invested in that space was essentially just stolen by the Fed's action to take it over. And if you look at how disruptive it would be if the Fed decides we want to take this over, I mean, they've tried to make the case that they could somehow issue currency, and I pulled out I think a $20 bill, but any of our currency, and no one from the Fed signs them. The Treasury signs them, and the Constitution's clear. Congress has the jurisdictional authority over money. So without a law, we can't do it. I think we're safe with a Republican majority that we're not going to somehow grant the Fed the authority to launch a digital dollar. But all the big banks are studying it, and around the world, over 100 countries are studying it. And they're not studying decentralized finance. They're not studying distributed ledger technology that works pretty well. They're studying the same version China's studying, which is central bank issued, central database, managed, cancelable, filterable, surveillable by the central government. And I just think that's, every dystopian future in the world depicts that as evil. So I don't know why we would even spend any energy going down that path.
Definitely. Is there a path there for a digital dollar that you think avoids some of those pitfalls?
To the extent there is, I would say the Bitcoin standard lays it out pretty well. And that would be something that is distributed ledger, immutable, stable. You could have something that's backed in that way, whether it's truly Bitcoin or something similar. But that's not something that can easily be controlled, and that's not appealing to central banks because they're central planners. They're just the ones that are generally accepted around the world. And so, I really think that the future of money is one of the most important things in the whole space. And if we go down this centrally managed, centrally controlled system, it really disrupts not just the biggest banks, but all the financial innovators in the space. It's essentially a government takeover of the sector, which I don't think is going to end very well at all. Like I say, there's a reason it's all in all the dystopian futures.
There you go. We only got a couple minutes left. I want to get your thoughts on 3 other topics quickly. Chartering, issue of big importance to a lot of fintechs. Will you be working to push for increasing the approval rate of ILC and other charters in this space?
Well, the bill that we had on ILCs just didn't work, and so I was glad to oppose it. And but at the end of the day, one of the things that you have a lot of, even at the private equity hedge fund level, people engaging in lending practices that it starts to look a lot like banks. And certainly fintechs can help. And at the back end, a lot of companies want to do it. They shouldn't have to become a bank to create an architecture that helps banks do underwriting or other firms. But I think there'll be some scrutiny on this. I'm not sure where we'll land, but I know we'll have some hearings on it.
Definitely. I want to circle back to the CFPB. We've got a couple of those folks, I think, in the audience and on the agenda later this afternoon. What are your thoughts on their 1033 SBREFA outline and its plans generally to finalize this rule next year?
Yeah, that was the reference I was making on privacy. So I'm excited about it. I'm hopeful that they've nailed it. They've certainly taken their time. It was very bipartisan in our task force and broadly on the committee. So we'll look at what they come out with. I hope to be able to celebrate it and say, hey, great job. If not, obviously we're going to give a lot of scrutiny to it. And I think the other big thing in CFPB, the courts just nuked their whole structure. So I don't even know how they're allowed to go to work this week. I mean, I think they'll probably continue to appeal the decision. But if they took it at face value, they essentially need a charter for CFPB. And we may well take that up and say, great, we're going to put them on appropriations. We're going to create them as a constitutionally organized agency. And, there have been court cases that said, yeah, you can't have somebody that isn't subject to being able to be fired. That was the first piece that was overturned. But their whole funding mechanism was overturned in a recent decision. And these are things that Republicans raised when they were launching it in the first place. I remember talking to Mick Mulvaney when he was the acting director. He came, as is required, once a year to testify before the committee. And he's like, look, the only thing this says is I have to come answer your questions. You don't have to like my answers. And frankly, at that point in time, they didn't have the court decision that said you could even fire him. So he's like, I can do whatever I want. And we raised an issue where the previous director had spent like $42 million with the same ad agency he used in his governor campaign of CFPB money. And he's like, yeah, and if you think that's bad, I could choose to spend $200 million with Breitbart, and all you could do is ask me questions about it. And you can't change it. So when you're not on appropriations, there really is a lot of discretion. That basically got blown up. So I think CFPB will get scrutiny, but in the meantime, I hope to be able to celebrate what they're going to do with this 1033 rule.
Definitely, good deal. Final thoughts, top priorities for the next Congress. We'd love to hear your top priorities and any opportunities for our fintech industry folks here to partner with you on some of those initiatives.
Yeah, I think one of the most pressing things is sound money. So if you look at quantity theory of money, Nobel Prize winning piece for Milton Friedman, he recognized what people have known all along: if you create more money, the value of the existing money goes down. A bit of trivia, William Tecumseh Sherman, when he was raiding the South and winning the war for the Union, a good Ohio guy, he destroyed the Confederate printing presses. And of course, the Confederate money was doomed to fail eventually, but it was getting debased rapidly. It was worthless in the South. But even in the midst of the war, in the midst of Sherman's raid, once he destroyed the printing presses in Atlanta, the Confederate money became more valuable because they knew the printing press wasn't just going to create more of it. And so it has this stabilizing effect, and I think we have to get our money system under control. Of course, that includes payments, but fundamentally it deals with monetary policy and fiscal policy. So, when we spend so much more money, one of the conversations I had with someone at the Fed was, well, what are we going to do, not cover you guys? You're spending the money. So I think that's probably the biggest gorilla in the room. And then beyond that in the space, we have to deal with the macro factors, legal clarity, and then overreach. I mean, whether you think the ESG rule that the SEC has proposed or is great or not, you can't have an executive agency just decide to do something. Congress passes the laws. And the West Virginia versus the EPA case from the Supreme Court made that clear. The Clean Power Plan, whether you love it or hate it, is, well, you got to pass a law. You can't just have an agency decide to do it. And so when you look at what fintechs can do as enhancers in that space, they can certainly shape what that law becomes or what it doesn't become. And so we'll continue to have dialogue with the administration on a lot of those priorities.
Great. Thank you so much. Always a pleasure. We got to Kim Kardashian, General Sherman, FTX, payments, the feds, and beyond. So definitely the only conversation you're going to hear all those topics today.
Yeah, thank you
all. Thank you, Congressman.
Thanks.